Is this your first time attending our What the CEO Needs You to Know earnings call lab? Yes, it is the first time, or no, I've attended before. Go ahead and answer that. Now, when you use this polling tool, make sure you hit the submit button. It won't actually calculate your answer until you hit that submit button. So make sure you do that. Want to make sure we're comfortable using that as we'll use that throughout today. So we hold these calls, as Ginger said, we're with a company called Acumen Learning. We focus purely on the topic of business and financial acumen. We help employees understand how their company makes money, how decisions are made around the money-making process, but most importantly, what can you do to impact the success of your organization? We do these earnings call labs every month, and the real focus is how to listen to these calls. How can I understand what my company's talking about? Maybe it's I want to understand a customer I'm selling into. It could be maybe it's a supplier or just a company you're interested in. Our goal is to really demystify what these earnings calls are all about and give you a simple framework and some tools that will help you to capture the strategic focus of a company, as well as be able to make decisions on what you can do to impact it. As I look at a group, it looks like about 43% of you, this is your first time, so welcome. All of you that are returning, please continue to come. It's a great opportunity to continue to build your skills around this. Not only do we do this as kind of an open enrollment, but we actually have this part of a course. It could be a standalone or part of what we call Applying Business Acumen, a new course that we've created. That one of the modules is all about how to listen to these calls, where you actually get a chance to do a deeper dive and actually practice using it. And look at your company, look at a customer, etc. So today you're going to get the simple framework, high level, as we kind of walk through that. Well, the second tool that we're going to be using today is that of the chat box. So make sure that's open, as Ginger described, and make sure when it says send to, that it says to everyone, okay? Now in there, here's what I want to hear from you. I do it every single time. I love just to get a feel for who's on the call, where you're calling in from. So in the chat box, if you just put in where you're calling in from, could be a city, could be a state, could be a country, maybe a location in your home, or maybe you're in beautiful sunny Hawaii or something on a beach. Where you're calling in from today as we get going today. My team and our headquarters are just south of Salt Lake City, Utah, is where we're located. A little place called Orem, Utah. It's at the base of Mount Timpanogos, which is a well-known mountain range. In fact, if you've ever heard of the Sundance Film Festival, that name comes from a ski resort called Sundance, which is a ski resort just on the north side of that mountain. We're at the base of that, so beautiful area here. Excellent. Welcome, Germany. It's evening. Thank you for joining us. Good to have. Looks like we got a few people international, so welcome to our program as we get going today. Well, that's enough kind of introduction to the tools. I want to jump into our program. There's a lot we're going to try and cover in the time we have. Now, please forgive me if we were doing more of a learning facilitated experience. We do breakout rooms and all that, but today we're just going to try and walk you through the tool, give you that resource, and then it's your job to take it and do something with it. Again, if you have an interest in trying to do a deep dive on your company, on your customers, etc., please reach out to us. Put in the chat box. We'll make sure and get somebody to reach out and share how we can help you with that. So, welcome to our earnings call lab featuring Ford Motor Companies, the company we've done. Every month we do a different company, a different industry. Last month we did telecommunication. It was Verizon Communication. We've done healthcare. We've done retail, a number of different industries, oil and gas, etc. So let's jump into this. Let me start by kind of talking about these earnings calls. These earnings calls happen on a quarterly basis. Well, actually, let me ask you the question. I forgot. I got a quick polling question. Let me put that up. So when you're coming to a how to listen to an earnings call lab, my question is this: when's the last time you've listened to an earnings call? Go ahead and answer that in the poll. When's the last time you listened to an earnings call? Brent, it's this year. Man, I'm ready to go. I listened to a call this last couple of weeks. Last year, boy, Brent, it's been a while since I've listened to an earnings call. You know what, Brent? I've never listened to an earnings call. Or for some of us, Brent, I would rather go to the dentist, rather hear fingernails on a chalkboard. I don't know what it might be. In the end, these earnings calls happen on a quarterly basis. Not every company does them, but most publicly traded companies will do these. It's a chance for the executive team to kind of communicate their performance, describe kind of how they perform, where they're currently at, where they want to go, and how they're going to get there. These are open to everyone. I kind of consider them a kind of a hidden gem. Even those that listen to them sometimes have a hard time trying to capture what it is they're talking about and how they can impact them. That's what our goal today is to provide a framework and some tools to help you to do that. Well, if I look at the results, looks like everybody's responded who wanted to respond. Let me kind of close that, and we'll open that up. It looks like majority of have listened to calls. Just a few of you have never had. So those that are new, no worries. I'm going to give you the resources and tools that will help build that confidence. And my guarantee is this: as you do it, you'll continue to build your understanding, get more and more comfortable with these. Well, even with these calls, and interesting statistics I want to share with you too, that kind of stand out to me as you think about this. Even with having these earnings calls, it's interesting to me to see that this stat right here: 95% of employees don't understand their company's strategy. Think about that. If I'm in a large organization, what is the executives trying to do? What are they driving towards? But most importantly, what can I do to impact that? Here's another kind of stat that's interesting. 90% of employees don't understand their company's important business metrics or measures. As you listen to these executives talk about Ebit or EBITDA, free cash flow, return on invested capital, all these different metrics that get thrown around as if we all understand exactly what they are. Well, I hear that information. How do I translate that into something I can do, something I can use? Well, if we were a small organization, we could get together on a very regular basis and we can learn from each other. We can ask the question. The bigger you get, the harder it is to kind of get everybody on the same page. So imagine you're a CEO of a large corporation like Ford. Here we go. We got the CEO of Ford, James Farley. You may have heard of it, James. He's been there for a while. Great experience, great background in the automotive industry, and he's now the CEO of an iconic American company. Ford Motor Company, established in 1903 by Henry Ford. We're all familiar with all the stories, examples of kind of that iconic brand and what they've done over many, many years in business. Obviously, here in North America, it's a key player. In the United States, in fact, most popular vehicle sold, not just trucks sold, the most popular vehicle sold is the F-150, Ford's F-150 in the United States. Change, as you think about his role, 95% of employees don't understand your strategy, potentially. 90% of employees don't understand the key metrics. Now you're dealing with this iconic brand. Customer expectations have changed. Have they not? You think about the last couple of years, how environmental sustainability, responsibility has become more and more a play in all businesses. In fact, if you were to listen in 2020 to earnings calls, at most companies in most industries, you'll hear something about social responsibility as well as environmental responsibility. Obviously, that's having a huge impact in the automotive industry. So your customers are changing what they want, why they want it. A lot more electric vehicles, autonomous vehicles and hybrids. Of course, you're dealing with a new strategy and trying to adapt to what's going on. Yesterday, I had a chance to do a quick video on strategic agility, the ability for an organization to change their strategy, to adapt. Then you add to it pandemic and all the challenges with supply chains that are impacted. You think about James Farley's role. He's earning his dollars today. That's a tough role to be in as you're trying to adapt, dealing with all the factors that are impacting. So what is it that Mr. Farley wants their employees to know? What does he want to communicate? Make sure they get on the same page. How is he trying to get them aligned with what they're trying to do? What is it that he wants their customers to know and understand? As you go around, just look at the dealerships. Drive past a Ford dealership. You'll notice inventory is down. We've all heard about this in the media, right? The ability to access vehicles is reduced. What does he want his customers to know? What about their shareholders? As you look at a supply chain, inventories dropped dramatically. They went from having 75 days of inventory kind of deployed in North America down to 20 days of inventory. They're dealing with a chip challenge, semiconductor chips. We heard about it last year. Last year we did General Motors. We also did Tesla, who both talked about this idea that semiconductor chips are hard to get access to. So they're actually producing vehicles, having them sit, waiting for the chips to come in. So what is it you want your shareholders to do? What's the future going to look like in this automotive industry, et cetera? Of course, then what do you want your partners, your suppliers, as you try to deal with supply chain issues? It's a tough gig in 2021, coming out of a pandemic, supply chain issues, semiconductors issues, Customers want different things from you. How do you adapt? How do you have that strategic agility? Well, business acumen helps to get that. And one of the great ways to build your business acumen is to listen to these calls, to then have a process to kind of capture what's going on. Well, that's what I want to try and do. I want to give you a process, a model, and a tool that will help you to understand what's going on in your company if you're publicly traded, to understand what's going on with your customers if you're selling and working with publicly traded companies, what to do with maybe suppliers if you want to understand your partners that you're working with. Or maybe it's just, Brent, I want to understand those companies I'm investing in. My guarantee to you is this: as you go through this process, as you use our process, the framework, and the tools, and do this on a regular basis, you will truly build your credibility, your career, and company. We do about 1,000 sessions like this every year, as working with clients, 30 of the Fortune 50, helping their employees understand their business models, how to make good decisions around the business models, understanding financial statements, etc. And what I find is those employees that engage around these earnings calls and get a routine of every quarter, come back, what's going on, where are we trying to go, and then how can I impact? Take that information and go execute around it. That's where you really see you will build that credibility, your career, as well as help the company succeed. So that's my goal, and my guarantee to you, as you use this information, you will truly build your credibility, your career, and your company. Well, with that in mind, let me introduce you to the process. Very simple process here at Acumen Learning. We're trying to give you a simple way to think about things. We're trying to demystify the complicated world of finance and accounting and strategy, execution. Just a simple 3-stage process. You got to prepare for these calls. You got to analyze them. You got to apply. So that's what I want to walk you through. In the tool that you'll get later on in our program today, it's going to have those 3 steps. So before I jump into the prepare phase, let me just quickly describe what these earnings calls. So this is a little business earnings calls 101. First, if you haven't ever been, that 15% haven't ever been to a call, they're kind of broken into two parts. Part 1 is what they call the prepared remarks. This is where senior executives get an opportunity to kind of share where they're currently at, where they want to go, and how they're going to get there. They're going to describe how they performed on what they told you in a prior quarter. So all their forecasting, all the guidance, they're going to describe whether they outperformed, underperformed, and why. What caused the overperformance, the success of what they did, or potentially how they adapt to meet an underperformance. Those typically are somewhere between 15 to 30 minutes. And then the rest of the time is turned over to what they call the Q&A, or question and answer period. Now, this is where an analyst get a chance to ask clarifying questions to try and understand what it is that the executives are talking about. Now, some might say, hey, Brent, I just focus on the prepared remarks. Now, that's great. If you just want to understand what your executives or your customers, competitors, whoever you're looking at, you just want to understand what they're kind of articulating. My recommendation, though, is to go ahead and review the Q&A as well. Here's why. The Q&A, you start to see where analysts kind of align with or agree with what the executives are talking about, but you also begin to see where they might question it, where they're coming back and saying, well, you're talking about, for example, you're talking about 10% growth. Now, I'm coming off of a model where you would have significant inventory. Your production is tremendous. Your capability around production is tremendous, and we're behind schedule. What makes you think you're really going to get 10% in 2022? How's that going to correlate with the impact to your revenue generation, your profitability, et cetera? There's probably 4 or 5 individuals that ask questions around that. Now, what that says to me is they're saying, okay, what's really going to happen? Now, the challenge is there's all sorts of dynamic issues they got to deal with coming out of a pandemic, supply chain issues, chip manufacturing, being able to keep up with it. All these things play out, and then customers' buying habits also play out. So in the end, the Q&A is a great way to get clarification on what's going on with the organization and where the analyst might say, hey, let me really test you a little bit. So I love it because it helps me to see what's kind of real, what's really going on. Well, with that in mind, these calls last somewhere between about 45 minutes, 40 minutes would be a short one, all the way to an hour and a half. That being said, most of them are somewhere around an hour period of time. So Let's jump into the prepare. What things do you need to do to prepare with the quick description of what they are? First, you got to locate the call. So how do you do this? If it's pre-call, you're trying to get access to what they call the webcast. You want to register for it. If it's after the call, they will actually create a transcript. Either the company itself or there's a number of third-party organizations that will create that for it. So how do you access it? I want to just quickly show you how you can go about accessing it. We're all familiar with Google. Now, I could show you the technical process. Go to the website, look at investor relations, look for events and presentations, etc. But we got this great website. It's called Google. Just type it in. Here's what you're going to do. You're going to just type in Ford. It's actually right there. Q3 earnings 2020. I got it right there. I click on it, and I got great information. Now, when you go here, what you're going to notice is there's stuff that's specifically from the company right here. Here's a media. So this is kind of a press release. Media as well. But I'm trying to find, is it with Ford? So, yeah, Ford Motor Company. Right here, I've got two examples that are specific from Ford. You'll also see third-party organizations like CNBC, NASDAQ, other companies that kind of third-party companies that provide little information. I always like to go directly to the investor information, so I'm going to go right here. Right now, it's actually not getting me right to it. I had it set up, but it looks like I missed it. So let me just go to Ford Q2 earnings call 2021. I'm going to switch and go Ford investor relations. Of course, when I want to do it on the fly, it's not working the way I want, so I'm going to go the old school. I'm going to go right here, go to investor relations, going to go to that investors page. Now, what I've got, it's actually telling me, by the way, if you're interested in Ford, next week, they're going to have their annual performance. You'll get to see what they said in Q3. Did it really happen? Now, right here, they actually have the presentation, but I want a little more information. So I'm going to go down here and click on 2021. And I'm trying to get to when they actually went through and did that reporting out, which I see right here. Here we go. So I click on there. I've got a presentation available. It looks like they may have just changed something today. I'm losing some of my information. That's interesting. But what I'm actually trying to look for is the information that provides the most recent quarter and kind of what's going on with that quarter. So if I go into the investor's information, the things that I want to get access to, I want to get access to the webcast. Now, if it's brand new, you'll notice here's the one that's coming up. So this is pre. If you want to get ready for the one next week, I go right there and I click here and it'll tell me how to register for the call. If the call has already happened, I actually want to look for that information that provides a little more detail on kind of they'll have a transcript, they'll have kind of various portions of what that is. So if I click right here, you'll notice I've got access to the webcast. If I click right there, hit join the webcast, it'll actually start playing that. Now this is a recording. It makes you register. I've already registered. So I click right there, and there it is. There's the webcast. Well, the other thing I like to find is that transcript. This is word for word what they said, what analysts said, etc. So after the call, you're going to actually have a recording of the webcast. You're actually going to have a transcript. There's actually a press release that will provide financial data, etc. It's all available. Once you do that search, just look for the event. If it's pre-call, you're trying to register for the event. If it's post-call, I want to either listen to the call, I want to get access to a transcript, maybe review a press release. One of the things I love is the companies that do a presentation. And in the automotive industry, they do a great job. Beautiful slides, a lot of information about what's kind of gone on in their business. But that information is tremendously helpful as you want to understand what's going on with their call. So, apologize a little bit of a delay there. Just go in, type in the company, the year of it, and then you're looking for webcast, you're looking for transcript, you're looking for presentation, etc. Which, by the way, you can just type that in. It'll take you right to it. So, pretty easy to access it. That's kind of how you approach that. If it's pre-call, you want to register. If it's post-call, I'm looking for a transcript. The next step of our preparation phase is to go ahead and is to review your notes from past calls. Now, you might say, Brent, what do you mean by notes? I don't have any notes. Well, of course, if you don't have any notes, you can go back and look at what was said. Q3, as you prepare for next week's call for the full year, Q4, as well as full year information for 4. Most companies will have kind of an archive of prior calls where you get a chance to look up the information if you want. Now, of course, as you start to use the tool, that becomes the notes you come back to. As every quarter you review your notes on your company, your customer, competitor, etc., you can quickly jump into your notes. What were they talking about? What were their goals? And then as you jump into the new call, you can see how they did. The last thing I recommend on this prepare phase is to go ahead and meet with a team, to kind of review it as a team. You can do it by yourself, and that's one option, but I highly recommend if you got colleagues, peers, direct reports, friends that you work with, that you might be interested in what the company you're looking at. It's a great way to do it as a group. You'll learn more as you kind of learn from each other. What did you hear? What did I hear? What do you think they're really talking about, et cetera? It's a great way to build the business acumen of an organization as well. So that's the prepare phase. You got to locate the call by going Google, just type in the quarter, the company, and earnings call. You'll be able to find that information. Review any notes you have or review prior quarters, and then be prepared to go through that information with your team. The next step is going to be the analyze phase. And that's where I'm going to spend the majority of my time today, is walking you through a model and 2 tools that we use to analyze. So let me start with the model. And those that have been through our course, I know a number of you are graduates of our program. And if you're not, no worries. Go ahead and try and answer some of these questions. I want to walk you through a simple framework that most companies focus on. 5 fundamental drivers every company focuses on. This is something that here at Acumen Learning, as we work with clients, we use this simple model as a simple framework for people to think about their business, to be able to talk about their business and execute on their business. Well, this model is a great framework to use as you listen to these calls. Are they talking about cash? Are they talking about profitability? Are they talking about assets, growth, and people? For those that haven't been through our program, I want to do just a quick run through of this model so you get more comfortable with it. Everybody that has been, feel free to answer my question. So we talk about cash in our program. Of course, we talk about cash. Basically, it's what's required to grow as well as maintain a business. When we talk about the importance of cash, there's a common phrase we use. Fill in the blank, if you would. Cash is blank. In business, cash is, how would you fill that out? Lisa says king. Yeah, common phrase is king. It could be queen, could be lifeblood of a business. So I think we talk about Ron Sharon. He describes it as, or I guess it's Ron Sharon, is it's the oxygen of a business. Of course, that's vitally important. As you think about cash in a company, there's 2 metrics companies usually talk about. One is called their cash as well as cash equivalents. That represents either cash that is in checking and savings account or it's short-term investments that will convert back to cash in 90 days. When you think of this type of cash, I suggest you think of kind of like a savings account. As you think about that as an investor, do they want your company to hold on to cash or see that cash position increase? Do they want it to decrease, or does it kind of depend upon strategy? What do you think? The savings account a company has, if I use that terminology, now some of you finance people might say, it's not exactly that. I get it. But it's a place where a company holds on to cash for future investment, for unexpected expenses, etc. What do you think? Do they want to increase that cash? Do investors want our company just to hold on to their cash? Do they want us to decrease, meaning they're deploying it to grow and expand their business? Or it kind of depends. Looks like most of you are saying strategy. It kind of depends. Absolutely. They want it to be invested. They want it to get back, but they also don't want you to run out. This one, it kind of depends upon strategy. Ford is spending billions of dollars, $11.4 billion just in the United States on electrification of their production resources. Why are they doing that? Well, they've got all this emphasis on electric vehicles and being able to produce both social responsibility, how they produce it, but also to be able to produce batteries and other things that allow them to be able to create this whole new generation of vehicles. So you're going to see a lot of cash going out to help fund that. Now, we don't want to run out of cash, but eventually as you start to get production up, you start to be selling more and more of these vehicles, you're going to start to see that cash increase. The other metric that companies talk about is called cash flow. Cash flow is the metric. Now, this represents the difference between all the cash that comes in from running their core operations minus all the cash that goes out from that core operation. Now, this represents the cash they generate from their core business. What do you think they want that to do? They want that to increase decrease, or it depends. What do you think? Investors, the money that Ford generates, do they want to see that for them to generate more and more? Well, no, less and less. Well, that kind of depends. Yeah, you got it. This is an absolute. We want that to increase as well. So Ford wants to make sure they're seeing. Now, where would I go to find that? If I wanted to see what was going on from a cash perspective, I'm going to look at that cash flow for sure. If I want to look at cash on hand, or what they call cash and cash equivalent, I can see it on my cash flow statement, but I also might look at my balance sheet as well. That's another place. So that's cash. Profit is the difference between the revenue that comes into a company minus the expenses that goes out for running the company. That's going to equal your profit. Now, I'm going to put in the chat box some terms. I don't want you to get confused. Profit is the same thing as earnings, which is the same thing as income in business. Don't get confused on terminology. If you're looking at your company and they say net profit versus net income or net earnings, know that that's all the same thing. The other terms that you'll want to make sure you capture is that sales, sales is the same thing as revenue, had a brain pause there. Revenue, which is also the same as top line. Of course, what does a company want to do with their profitability? They want to increase that, decrease that, or it depends. What do you think? Profit of a company, what do we want to do? Absolutely. Just like cash flow, they want to see that increase. Now, how do I do it? Anything I can do to increase my revenue or sales, or anything I can do to reduce my expenses will create profitability. Now, we hear a lot about this in business, do we not? Is this the first time you've ever heard anybody say reduce costs or reduce expenses to increase our profitability? We all hear that. We all get pressure around that. It's more efficient. Absolutely will help us to do that. So as we look at profitability, what terms might you hear? Gross profit, operating profit, net profit. Also could be called gross income or gross earnings, could be called operating earnings or operating income, and also could be called net earnings or net profit. Again, synonymous of terms. One acronym we'll hear them talk about, it's actually operating profit, is also known as Ebit. Anybody happen to remember what Ebit does? What Ebit is? Put in the chat box if you remember. And of course, we want all these profitabilities to go up, and how can we do that? Anything we do to grow revenue or reduce our expense. Thank you, Anthony. Earnings before interest on our debt and taxes. Why is this important? It's kind of how the market looks at controllable profit. The core operating of a business, how much profit do they generate? That's what we're looking at. Now, assets represent anything you own or control which has value. When you think about own or control which has value, what do you think Ford owns or control which has value? Put in the chat box. Rims, there you go. Buildings, manufacturing plants, absolutely. Some inventory, absolutely. They have cash on hand, they have receivables. These are all assets of a company. Now, how do I take those and deploy that is really what asset driver is all about. Now, if I want to see anything about profitability, I'm going to go to that income statement. If I want to understand assets, I'm going to look at balance sheet. Now, as we wrap up this 5-driver model, growth is what investors want. That's what they're focused on. Growing your profitability, getting more cash paid back to them by way of dividends or stock buybacks. And they want to see price appreciation of your stock price. Growth is a key factor of a publicly traded company. Then people are at the core of them all. Now, this isn't happenstance. We didn't just think, oh, let's just put them there. It's at the center very specifically because what it says is that people impact all of these metrics. You can have great cash available for a new startup, great potential margins on the products you want to sell, assets that you're deploying, and a growth potential. But if you don't understand the customers you sell into and you can't get your team to drive towards results, you won't succeed in business. Well, with that, now with this 5-driver model, you can use that to assess what's going on in these calls. So let me introduce you to the first tool, or what we're calling the executive alignment activity. Let me explain how it works. On any of these calls, whether you're listening to them or you're reviewing a transcript, all you do is you're listening for what are they talking about. Are they talking about cash? Are they talking about profit, assets, growth, or people? And as they do that, every time they say something about cash, you put a little slash mark. Every time they say something about profit, a little slash mark. Assets, growth, and people. And as you continue through the call, you'll jump around. different metrics that are drivers that they're talking about, etc. At the end of the call, you're able to see where they focus their time and attention. You add them up right here, and you get a total amount. That's how it works. Now, don't worry, you don't have to have gone through our program. I give you a definition. Here's a quick definition of what we mean by cash. Not only that, I give you what I call trigger words or examples. If you hear if they talk about dividends or distribution, that's for sure going to be cash. You can also say that's a people thing because shareholders appreciate dividends and distributions. Of course, buying back stock, debt. These are all examples of sources or uses of cash. Every time I hear one of those, I put a little slash mark. At the end of the call, you imagine this is going to be all filled up with a number of slash marks. You then go over and you answer 4 simple questions. The questions are, which business driver seems to get the most attention and why? Where do I get that? From right over here. The why, I love this part of the question because it forces you to think about what's going on in their market. How's competition impacting them? What are they saying they're going to do versus what are they actually going to do? In addition to that, what were the 2 or 3 main points the executive was trying to make? What are the goals, trends, objectives going forward? And because it's an earnings call, this question, what were the key questions the analyst community were trying to ask? Now, folks, we were a half hour into our earnings call lab today, and we're not going to have time to go through an hour-long call and have you go through everything. If you want to do that, reach out to us. We have a great program on how to do that, where we literally walk through how to use this tool. We actually go and do it. You get a chance to look at your most recent annual year plus your most recent quarter. It's a great way to formalize and get more comfortable around these tools. So what I'm going to do is I got 3 quotes. I'm going to give you 3 quotes, and here's what I want you to do. Everybody can participate. Open your chat box. And all I want you to do is tell me which of the 5 drivers seems to stand out in that quote. We'll see how that goes here. So here it is. From their CEO, an opening comment from Mr. Farley. He says this: company-wide, we achieved an 8.4 EBITDA margin, including 10.1% in North America. Those margins, I remind you, are in line with our targets for 2023. Looking at the 5 drivers over here, which of those drivers seems to stand out in that first paragraph? Absolutely profit. The moment I hear margin, or as many of you shared with us earlier, Ebit, also known as operating income, or known as earnings before interest expense on your debt and your tax obligations, that's absolutely going to be profitability. Now, the fact that the numbers are there and they're aligned with 2023, you might be able to, as Brooklyn suggested, this idea of growth. They're already hitting their forecast of what they would do in the future as you start to get supply chains in better. So it really speaks to the strength of what they did in the quarter. Well, here's another paragraph. We've been able to achieve this while thoughtfully managing our supply chain for short-term sustainable improvements, including semiconductors, and prioritizing high demand and high profitable vehicles. What metrics, let me go back. Which of the 5 drivers stand out in that paragraph? Yeah, as you start talking assets, semiconductors, that's part of the inventory that goes into these profitable vehicles, which are also assets. Of course, you might, the moment it says profit, you could probably add profit to that. The whole supply chain issue speaks to utilization of assets and how well are you able to get access to your supplies to be able to build these vehicles. So yes, assets, absolutely, maybe a little bit about profitability. Next paragraph, yeah, weave is getting, thank you, Anthony, people as well, as you look at weave up here. I believe we have the right plan to drive growth and unlock unprecedented value. Go ahead and type in the chat box anything you see. You are already seeing favorable changes in the slope of our earnings and cash flow. There's more to come. Yeah, the moment it says growth, that's easy. The moment it says cash, that's pretty easy. Now, earnings, again, is also known as profit and income. You see at least 3 of them and maybe more. Well, folks, you kind of see how this works. In the end, we do about 1,000 of these sessions a year. Now, it's not an exact science. If you and I were to go through these 3 paragraphs and do our slash marks, we may not get the exact same number. But going through a whole call, doing about 1,000 of these every single year, multiple industries, multiple companies, invariably, the top 2 or 3 drivers will rise to the top. Now, you may have assets growth, and profit is your ranking. Mine might be profit, assets, growth. In the end, the top 2 or 3 tend to go to the top. That's how you use the tool. Let me give you another quote. I'm not going to read it. You just put in the chat box, kind of review it. What do you see standing out? Now, this is Jeff Lawler, their CFO, their financial focused individual of the company. What is he talking about in these 2 paragraphs? Which drivers seem to stand out? Seeing some consistent themes, semiconductor strength. Yeah, some of that assets. Strengthen our portfolio. We got growth here, talked about. Again, profitability. This is a profit number right here. Of course, margin. Again, that's going to be profit numbers there. We got cash again. This is that free cash flow metric. This is, by the way, every company looks at cash and cash equivalent, sometimes just referred to as cash on hand. You find that on your balance sheet. Everybody also looks at what they call cash from operations. That's found on the cash flow statement. But many companies will do what they call a free cash flow number, which is you take the cash a company generates from its core operation. You subtract out whatever you're going to invest in to build your business, it's what's left over. That's called free cash flow. It's vitally important for investors because if that's positive, that means, hey, look, you generate a certain amount of cash, then you're able to fund the growth in your business, but still have cash left over to get back to us, to pay down debt, etc. That's seen as a strong metric. So definitely cash as well. Yes, absolutely, Anthony. Cash is an asset as well. You'll see some interplay. By the way, if I do good in my profitability, this $3 billion, assuming I collect that, meaning you realize I sell it, I got to actually collect those dollars. Assuming I collect it, it'll eventually become cash. So you'll definitely see a bit of an overplay or interconnectivity between these drivers. And don't worry, you can go ahead and put multiple things on one message. You could say, hey, I see cash flow. I can see profitability in the same sentence, which is just fine. Okay, well, let me do one more. Last one here. This comes from Bank of America, Merrill Lynch. John Murphy is an analyst. What did he talk about in his communication? Go ahead and put that in the chat box. Last one here. I'll just start highlighting words that trigger me. Oops. 2 million units stands out. Talking about growth in units, about a $200,000 increase, or it's 200,000 unit increase. This is the one that the analyst asked a lot of questions. You're saying only 10% increase, but we're supposed to get better supply chain issues. How can that really be? Or if that's really true, if what you're saying that's true, how's that really going to impact your profitability, your cash flow, et cetera? Are you going to be able to hit the margin goals, the cash flow goals that you have, et cetera? Well, folks, that's how you do it. Fairly simple to go through. Now, again, I don't have enough time to go through the whole thing. It was about an hour-long call, but I did it for you. So let me just show you the document filled out and kind of what I shared, what I found in the call. Again, if this is your company, I'd suggest go back, do it yourself. See how it compares against my numbers here. But what I've got here is I went through the whole call and I did both the prepared remarks as well as the analyst. Now, I like to separate them. You don't have to do this, but I actually do it in 2 different colors. That's purposeful. Why do I do that? It helps me to see where there's alignment or where potentially there isn't alignment within the organization. Fairly aligned between the questions that are asked and what was communicated around cash. You look at some of the other ones, though, a lot more analyst questions around profitability than kind of the executive communication around profitability. You see a similar thing around assets, a little bit more from the analyst versus what the prepared remarks. Fairly consistent as you look down here. Well, of course, that's the answer. So total them up. The biggest by far was, again, be the assets. And then you kind of have these 2 pretty neck and neck for number 2. Again, your numbers might be a little different, but having done about 1,000 a year, the top 2 or 3 will stand out with everybody. One may be a little higher than another, but most will do classes of 20 to 30 people, and invariably the top 2 or 3 will rise to the top. So with that in mind, I got to answer the questions. And again, I went through and answered those. You can't see them here. Let me just jump through them in a little more detail. We may not go through everything, but let me highlight what I saw there. Of course, assets was huge. Let me just highlight some of the stuff that stood out. Huge amount of focus on all the new products they have. And of course, a lot of it is with the hybrid or electric vehicle. We all heard last year the F-150 Lightning coming out fully electric of their flagship vehicle, their F-150. To come out this year. Mustang Mach-E as a huge one. In fact, over demand on that one. The Maverick as well. This is a hybrid, 41, 42 miles per gallon in a pickup truck. Hugely successful new opportunity. E-Transit is their commercial vehicles to help with commercial transportation, et cetera. Of course, the Bronco came back as well. So a lot of discussion around these assets and how they're building facilities to produce these assets. A lot of emphasis on the new products they have. They're also generating new organizations to help change. A lot of focus around changing their organization to meet the demands of the world, which means they're going to change the way they do stuff, change their asset base, et cetera, to change and power the future work with compelling commercial vehicles, distribution services while growing revenue. That's the focus of this Ford Pro, is how to make this transition. In the second quarter, we told you about a new partnership with Argo AI. This is an automated software system that they partnered with. In fact, they own 40%. Volkswagen owns 40%, and the original Argo founders own 40%. They got a lot of projects and partnerships that they're doing around that. Let's see here. I got a question. How can you interpret this data given the analysts largely influence the number of additions? Yeah, absolutely. The question, this is not an exact science. If I move back on that slide, it's a bit of, for me, how can I start to make sense of what's communicated? So to your point, analysts really skewed that and made them a little higher. Maybe others would be different. So if I just wanted to look at the focus of the prepared remarks, I would look at that. But I like to get the whole picture. It gives me a whole view, both from an analyst perspective as well as the prepared remarks, what's communicated. It looks like what you mean. Let's see. The analysts influence their forecast. Well, I think what they're talking about there, Anthony, is this, where there's a lot more focus on this one right here versus this one versus what the executives were trying to communicate. So it's influencing, it's skewing my numbers a little higher over here. Like I said, it's not a rocket science. It's not an exact science. The idea is, how can I make sense of this? Can the 5 drivers model help me think about what's going on in my business and help me to make better decisions around what I'm doing? From a growth, huge increase in orders. Like I said, 139, almost 140 million. Oops, that's not a dollar sign. Let me scratch that out. Customer orders as of Q3. So it's about 140,000 orders that they had as of end of Q3, and looking to see that increase. With improved chip supply, where did they have growth? So sequentially, meaning from Q2 to Q3, they got more access to chips, which allowed them to see significant increase, which, by the way, this is why analysts are starting to say, well, wait a second, if the chip supply gets better, why would it only be a 10% increase? In one quarter, you saw a 67% increase. What's going to happen there? Starts to cause some questions with analysts. Of course, they talked about in China how Lincoln's doubled their share. So a lot of growth there. BEV is battery electric vehicles is what that refers to. A lot of emphasis and growth in those areas. Thank you. That was helpful. Let's see here. And then finally, underlying strength of our business supports increase in our adjusted Ebit guidance. So they actually upped how much profit they're going to generate to somewhere between about 10.5 to 11.5. That's despite the lower than anticipated improvement in chip. Really hoping that anticipate that chip to come back, and that's why they say it's so dynamic about the changes. A couple of things I just highlight, some financial metrics, revenue for the year. This is kind of year-to-date numbers. Here's kind of the quarterly numbers. Just a great example of a slide they provide that gives you just a dashboard of how what areas they focus on. What's their key metrics? Revenue, EBIT, the margin, free cash flow is this metric right here, and then of course earnings per share. And then kind of a year-to-date as of the end of Q3, the first 9 months of last year. How are they performing? So why are they focused on assets and growth? Well, the whole industry is changing. So communicating what new assets they have, the growth and the opportunity. You see a real curtailment of growth going in 2020 and then 2021. And now are we starting to see a recovery, and how's that going to play out as we're adding new assets along with starting to see supply chains hopefully open up? They really are suggesting that they won't get back to kind of the supply chain they had before until about 2023, but they expect 2022 to see an improvement. So that's the first one. Question number 2, what are the 2 or 3 main points? Here's just a few of them. There could be others. If you were to read, you might have others, but these are some of them that stood out to me. Number 1, this idea of Ford Plus. That's a big initiative. It's not just a tagline. We're creating iconic and distinctive products that only Ford can do. Increasingly, always our relationship with our customers and ever improving the experience, all while creating value for our shareholders. We're fully vested in the future, and we're taking big swings. You think about when we talked GM last year, GM identified, I think, 35 new electric vehicle options. At the time, they only had one option. These companies going from ICEs or ICE vehicles, which is what we all drive, right? Internal combustion engines, to these electric or hybrid. That's a big change that's happening in the whole industry. And Ford Plus is their way of trying to execute around that. Of course, key to this plan is how they can make connectivity. And that's a big emphasis of what they're doing is as vehicle connection. Lead the electric vehicle revolution was a key message. And they talk about particularly around battery generation. Enough battery power to meet our mid-decade. So 2025 goal of 141, they're already hitting it today. This means they can produce about 1 million battery electric, or what we call BEV, vehicles per year, which really helps them to make this transition into a new market, a new industry, and adapt based upon what customers want. Of course, a lot of emphasis around growth, electric, commercial vehicles, services, connected services, autonomous, and other mobility. So Michael's asking the question, free cash flow have been generated from debt reduction, refinance, charge production process. Yeah, there's a number of factors that have impacted that for sure. Even some write-offs they did in 2020 that lessens their depreciation amortization expense. So key message, hey, the industry's adapting. We've got a plan for it. And let me tell you some highlights of things that we're doing to help us be at the right place at the right time with the right products or service. I'll just hit a few slides. I won't go through all of them, but you can get access to these. This is kind of their Ford Plus, if you want to say, formula. My foundational strengths, iconic nameplates. We're leading position in the market. We got Ford credit. What does that do? It drives strong margin, strong financial performance. You add to that enhanced capabilities. This whole integrated software and hardware coming together, connectivity, data analytics. What does that do? It gives us great customer insights, what they want, how they approach the vehicles, how to make it safe, more efficient, etc. So what does that do? It gives me more areas I can focus. Electric vehicles, commercial vehicles and service, connected service, autonomous and mobility. That's how they see the future. And I'm just going to put this in. I won't spend much time. But I love the pictures and kind of it's the same formula with examples of what they do. In the end, I just thought I'd hit a few of the things they've done. $11.4 billion investment around this electric investment just here in the United States. Not only that, they've got investments with creation of batteries, about 1 million batteries per year that they can produce. They also have internationally investments in, I think this is in Germany, if I remember correctly, Turkey investments, joint ventures around trying to play in this new electric area. If you look at the other side of what they're trying to do, commercial vehicles, services, connected services, just a number of changes that they can look at. If you want more detail, highly recommend, go ahead and jump to the website, download this. You'll get more detail on what they're doing. Significant change happening at Ford. It's an exciting time. So where are we headed? What are we trying to accomplish? They kind of highlight some outlook of what they were seeing for the rest of the year. This is a great slide if you want to see when you next week when they share their numbers, how well did they do as far as their forecast? In the end, they kind of broke it into kind of the opportunity they have, but also challenges they face as they look at 2022 and beyond. Underlying strengths of the business, significant new icon, high volume nameplates. And we talked about a lot of those: Mustang, Bronco, Maverick, etc. Enthusiasm for new nameplates, which is attracting new Ford customers. Relentless execution on Ford Plus priorities, including customer-facing technology, connectivity, and electrification. And finally, global redesign benefits now evident. Operations outside North America show positive trajectory. Basically, we're doing business different. Now, what are the environmental challenges they face? Well, supply chain, that's going to impact up or down what's going on in 2022. Interplay between semiconductor-related constraints and then volume and pricing. As you think about, if you're low in supply, that's going to potentially increase your pricing. Well, as you start to see supply chain improve, how does that impact pricing? How does that impact profitability? How does it impact production levels, et cetera? So again, a very dynamic environment in 2022. Some of the commodity headwinds, you're seeing stuff like $1.5 million impacts with inflationary constraints, and then wraps up with overall inflationary impacts for the business. A lot's going on in the industry. Well, let me wrap up quickly with just the analyst question. What were the highlights? Here are the ones that stood out to me. Number one, what is this growth really going to look like? That 10%, what's really, multiple people asked about that. Either, is it really only going to be 10%? Or if it's 10%, what does that mean to your ability to reach these metrics you've described? Well, wait a second. It sounds like chips going to start to get better, so why wouldn't it be higher, et cetera? So questions like that. Talked about the chip shortage, inflation around that. Back to normal in 2023. High growth transforming Ford. We have to be quicker to compete on the electric vehicle market, and some highlights on that. They described, for example, the Maverick. They went from, I guess it's like a 4-year period to get a new product to actual market, and they did it, they knocked off 20 months of that process by getting more efficient to market. Of course, technology helps with that. This whole idea, if you want to look this up, this is quite interesting. Order bank versus ground stock. Their typical approach is we develop a bunch of stock, get to dealerships, 75-day inventory, and now they're moving to an order bank where people actually order. Think about that. If people are pre-ordering, it lessens the inventory you have to carry. You're more efficient about your production levels. You know exactly what you're producing because people have already ordered it. The question is, are people that are ordering, are they really going to wait 4, 6, 8 months? And we've seen this with companies like Tesla, right? To get a new Tesla, it points because of supply chain, it was taking 6 months before you could get access. So how long are customers going to be okay with that? But that's an interesting kind of future focus, and questions were around that. And the idea of kind of this model changing, is it a temporary change or is this a long-term change? Well, folks, that is the tool. Now, at this point, what do I know? I understand kind of the key metrics and measures that they're describing, their goals around that. I understand this transition they're going through. I got a much better picture of kind of their puts and takes in 2021, as well as they started to open up in 2023. Well, the next tool that we have is what we call the Navigating the Financial tool. With this tool, you should be able to assess the financial performance of the company. Here's how it works. Basically, what you're going to do is, on the left-hand side, you have the 5 drivers: cash, profit, asset growth, and people. You then have the key metrics we've talked about. These are the key metrics companies look at. In addition to that, you don't have to go through one of our programs, but you can actually find, where do I go to find that information? And so what do? You then go in and you say, okay, let me go find that information. So example, if I want to get cash and cash equivalent, what statement, put in the chat box, do I need to go to based upon what you see here? If I want to get cash and cash equivalent, what statement do I need to go to? It's right here. It's the balance sheet. So I jump to the balance sheet. You'll see it right here. Now they do a little different. It's backwards. So I want the number for 2020, September 2021. I put that in my document and I see what happened from a cash perspective. I do the same thing around cash from operations. What statement am I going to go to? It's the cash flow statement. So I turn to my cash flow statement, go about a third of the way down. Right here, here's the number. Bring that over. That represents the cash that they generate from their cooperation. Now notice it's actually down year over year. What do we want the cash to do year over year? We want to see that go up. If I want more detail, I jump in and see why. A lot of it has to do with supply chain issues, chip issues, other things that impacted their generation of cash year over year. Well, the next one I want to get to is revenue gen. Now I'm just doing the quarterly numbers, so let me grab this number right here. I plug that in, $35,683,000,000. Now I'll notice it's actually down year over year. What causes that? Has to do with revenue gen. It's basically volumes and or pricing impacts that. As volumes go down and or pricing goes down, you're going to see your revenue go down. I got to get my net income number down here to do my calculation. I plug that in. It's 1832. At this point, I'm ready to do a calculation. I add those. I put those in. Do my calculation. What that says, for every $100 Ford Motor Company brought in Q3 of last year, they generated 5.1 or $5.10 of profitability. If you think about that, is that a high margin, kind of an average margin, or a low margin? What would you guess? Yes, it's relatively low. You're about 10%, 8 to 12% is kind of average. So definitely a lower margin. Of course, they want to get a margin higher than that, and that's what they're looking to work towards. Well, folks, that's how you do it. We don't have time to go through all these numbers. Let me just give you them. So I can look at it a quarter basis and kind of compare Q3 of last year to Q3 of 2021. I can also do it sequentially. I could do Q3 of 2021 versus Q2 of 2021. I can look at it for the year-to-date information. Here's their numbers looking at the first 9 months of last year versus the first 9 months of 2020. You can see changes, see what's going on. Why is it going up? Why is it going down? What's causing this, etc. You'll notice, for example, on the quarterly numbers, we're seeing a reduction in profitability, but for the annual numbers, we're seeing improvement. Well, you can also do that by comparing against a competitor. That's what I have here. And in addition to that, I can compare that to any company. Now, those of you who were with me last year, or when we did our December one, we looked at Verizon. So here's Verizon numbers in comparison to Ford, which are two very different business models, right? To kind of see that difference of what's going on. Well, folks, those are the tools. That's how you do the analysis. Now, at the end, you got to come back and say, so what am I going to do about it? The apply is the key here. So as you look at apply, let me kind of highlight, to know and not to know is not to know. If you don't take this information and do anything, you've wasted your time. So the next section is all about how to approach that. How do I go in and do that? So the first question there is, what new insights? Here's the things that stood out to me. This order bank versus ground stock. It's a whole new way of doing business. Customers order their vehicles versus buy them off the shelf, so to speak. That changes the way they do business. Now, is that going to survive forever, or is there going to be kind of a hybrid model? That was interesting to me. This chip impact continues to be a challenge for them. How much acceleration in the EV market, huge growth in that, electric vehicle, huge investment in those dollars, and significant new products that they're focused on in their business. Those things stood out to me. Now, if I was an employee, I might look at different things. You then go into the last part of your apply is, okay, so what am I going to do about it? Based upon what I've read, what is it I'm going to try and do? Well, as a consultant, I want to compare their performance against their peers. Look at GM, look at Toyota, see the different industry, what's going on. I want to share this information with the consultants that I work with. And lastly, I want to see if we can work with Ford. I'd love to work with Ford and see how we can help them. The last step of the tool is to go have a question. If it's a company you've looked at, your own company, go have a conversation with your manager. If it's a competitor, think about how you can strategically focus your efforts in your company. And finally, if it's a partner, how can I be a better partner with them? Well, folks, that is the process. As we wrap up today, you remember that second step of part one was to review your notes. As you complete these documents, that becomes the tool. So as I wrap up, I've got a poll question here. Let me give you that. The question is this. Now that we've gone through this, who are you going to analyze? What company are you going to analyze is my question. Go ahead and put that there. You're going to analyze a company you work for, a company you sell to, somebody you partner with, a company you want to invest with, or a company that you're interested in. Now, next month webinar, we're going to do Facebook, where they changed their name. It's actually Meta, but that's their operational name, but Facebook, the brand is still out there. We're going to look at Facebook, so maybe that's somebody you want to look at. Go ahead and who are you going to look at, and then I'll close this up and give you the tools here. Make sure you hit submit so it gets over to you. Going once, going twice. Go ahead and close it. Who are you going to look at? That's what we want to look for. That's the next step of this. Now, folks, that's what I want you to do as we wrap up today. Here is the resource. Go to acumenlearning.com/webinar. You can access the workbook. Not only that, you can actually register for our next webinar, which is going to be February 23rd, and we're looking at Facebook or Meta. In addition to that, as Ginger described, if you're new to this and you want to get a little review, a deeper dive, we have a great self-paced online course. We'll give you $100 off if you go to the website and you can register there. If it's been a long time, you want a refresher, that's also a great resource. Now, we do this with 30 of the Fortune 50, many of the Fortune 500. If this has prompted you with an interest to say, I like to do this with my team, I like to do this with my company, or I want to bring it to our training development group, please reach out to us. Our goal is to help people understand how their company makes money, how decisions are made around the money-making process, most importantly, what they can do. And listening to earnings calls is a great way to continue to build your business acumen. With that in mind, I think my time is far spent. Thank you for joining us. I will stay on and answer any additional questions. Make sure you go ahead and download those resources. And once you're done with that, have a great day. I hope to see you next month. Let's see, I think we had a question back here. Teammates, did I miss one? Looks like as you were covering cash equivalent, and assets with value, any thoughts around consideration of companies that hold investment assets that seem to hedge against the position of the company? Think of Tesla, Dodge at the moment. You know, it's interesting to think about the cash and the cash equivalents and how people choose to manage their asset base and hedge against future challenges that, carry more inventory, for example, as a hedge you could do. Access more inventory because inflation is going up. The challenge with that is you got more cash stuck in your inventory. Can you get the production out quick enough? There's multiple ways to kind of look at that, but in the end, each company has their own strategy. They've got to kind of consider around how much cash do I carry versus how much cash do I deploy, and I access value to kind of help mitigate or hedge against challenges they may face within their organization. Maria, let me know if that gives you some insights there. Was there any other questions? Free cash flow must have been generated. Oh, we already talked about that one. Higher profitability, he's selling more and charging less, which they've done, absolutely. We already talked about that question. Do we have access to GM training? You mentioned, yes, Dave, you do. Did anybody give them the website? If they just go to our website, you should be able to download that by going to acumenlearning.com / I think it's webinars, but let me just get there. Webinar schedule. Let me say it. Try and say that 3 times fast. So Acumen Learning, one of my colleagues has the link. Go ahead and put it in there. I'll try and get it there. Oops.
It's in the chat box, Brent, as well as
Thank you.
You can find it on youtube.com as well, / Acumen Learning.
I think if I go here, you have access right here. All previous webinar, any of those are available. So if you want to access that, you can get that. Great question. Looks like Brooklyn, thank you for answering that. It's also on YouTube, it looks like. Does Ford pay a dividend? Great question. They just reinstated that. At the end of Q3, it's 10 cents per quarter. There are some questions around that. Is it really the right time to do that? But if a company reinstates their dividend, that suggests they got real confidence in their future. You wouldn't want to reinstate it if you didn't have quite a bit of confidence that you continue. Because once you start doing it and you start pulling back on it, has a significant impact on your stock price. So great question, Anthony. Yes, that is correct. Folks, like I said, happy to stay on if you have any additional questions. If not, just go ahead and exit the call there. And that's how we'll know. Again, acumenlearning.com / webinars, where you can access registration for our next webinar. We're going to look at Facebook. You also can download the participant guide. Highly recommend you begin using that. Again, if you have an interest of, hey, I want to do a deeper dive with our company, let us know. We got everything from what we call an earnings call debrief, where we walk you through the call, to actually a learning experience where you get practice taking people through doing this analysis as well. Happy to do either of those for you. Well, folks, looks like we're dropping in numbers pretty quickly here. Again, happy to stay on if you have any additional questions. Thank you, Anthony. Very kind. A little bit above my pay grade, I think, but thank you. Good to have you guys. Well, folks, we're going to go ahead and wrap up. Unless there's any other questions, happily put them in the chat box if you have questions. Otherwise, we're going to be wrapping up. Again, you'll be able to find this in the next week or so, be able to access the recording if you want to share it with anybody. Please feel free to invite anybody. You don't have to go through our course. Our goal is to really change the way people think about and understand the strategic focus of their company by listening to these earnings calls. So please, it's open enrollment. Anybody can join us. Our goal is to get that information. And if you have needs around business and financial acumen, please reach out to us. We've got some great resources, worked with 30 of the Fortune 50, many of the Fortune 500. We've got all sorts of programs that are available to help build the business acumen of you, your colleagues, your peers, and the employees of your companies. Well, folks, thank you very much for your time. If there's nothing else, Ginger, let's go ahead and close out.